Okay.
Hi, this is Mark Sebastian with the Option Pit end of day trade. And today we're looking at, and this is going to be something we'll put out once a week for the blog, folks. Now, obviously, this is for educational purposes. None of this should be construed as investment advice. Consult your financial advisor. So I'm looking through the market, and a name that has been consistently hitting me is CSX. All right. Look at the way the implied volatility has exploded. That's this red line here. All right. And look at the explosion in volume. All right. This is a name that on a normal day does 6,000, and today it's a slow day and they're going to do 100,000 contracts. All right. They've done 100,000. Yesterday they did 150, 125, and 130. There is something going on here. Now, what do I think is going on? I think they're getting set up to be bought either by Burlington Northern Santa Fe or Union Pacific. There's also been rumors of like a merger of equals between it and like CNI. All right. And the reason why it works with all those is that there's almost no overlapping routes. If they merged with Union Pacific or Burlington Northern, they might have to divest a little bit, but not very much. Now, we've seen this the volatility of CSX Corp, the volatility of vol, super up and down. I mean, the thing just moves. But I think there's a reason why all these call buyers keep coming in. All right, and it's not because they're stupid. All right, so the simplest trade, if I look at a skew chart, in relative terms, I think June is certainly cheaper than May, but there's some points where May just looks dirt cheap. All right, and one can see those 37s, which are right at the money, are jacked. The 38s are not. All right, now spreads are a little wide, which throws volatilities off, but it's pretty easy to see where the relatively inexpensive trade is. All right, so if you're a spread trader, or if I was a spread trader, all right, the trade I might do would be like the 38 calls, which are clearly the cheapest on the board. All right, and then I might look and say, hey, look at that jump at the 39. I can sell the 41 calls and collect about a quarter. So if I do this spread for less than 60 cents, the 38.41, let's say I pay 58 cents on a $3 vertical. That's basically right at the money on a stock that's been flying. This is a trade that I think I can win on. And so the trade I would do if I was a spreader would be the May 38.41. The real simple trade, all right, on a breakout name like this is the 38 calls. All right, if between buying 36%, 35.9% volatility, or 38.3, it's very clear where I think I can make my money. All right, if I'm a little wary of going that near, to date, even in June, the 38 calls are cheap. I want a little extra time, and this is probably the outright trade I would do. So if I was a spreader, I'd probably do the May 38.41. As an outright purchase, I think the June 38s are a steal. So the trade that I think is likely to be successful from my standpoint, even in the morning to the afternoon, because CSX has had this great pattern. Let's look at a tick chart of just making kind of end of day moves or midday moves higher. I mean, this is just, you don't see a chart like this in railroads. then if I show you the volatility, the nice thing is the volatility appears to be flattening. It's out of insane mode and is back to kind of levels it's bounced from before. So the trade I like is the June 38 calls for $1.25 buying, and I'd be looking to flip those out at $2, and my target exit would be Monday or Tuesday at the latest. All right, folks, if you've got questions, you can email us, info@optionpit.com, and you can call us 888-TRADE-01. Again, this is for educational purposes only, but it's interesting to see how a professional might approach a hot stock like this that has some serious movement. Thank you.